One day, the market is hitting an all-time high. Just hours later, it's in a total free fall. Now, this wasn't some random glitch or technical error. Oh no, this was the opening shot in a global economic showdown that played out in just a few shocking hours. I mean, look at this. On one side, you had pure AI euphoria pushing absolutely everything to record levels. On the other, the sudden gut punch of trade war fear. So what on earth could cause such a violent U-turn in global sentiment? Well, the answer lies in a series of calculated, really aggressive moves. Just think, only days ago, the scene was set for even more growth. Investors were feeling confident, maybe even a little too complacent, but beneath that calm surface, tensions were simmering. And now, we're going to break down exactly how this high-stakes game of economic chess completely shattered that calm. And that first move, it came from Beijing. And let's be clear, this wasn't just some random policy change. It was a direct, strategic shot aimed right at the heart of the global technology ecosystem. Okay, so to understand China's move, you really need to know about rare earth elements. The best way to think about them is like essential vitamins for our entire tech world. Without them, you get no advanced chips, no next-gen smartphones, and definitely no sophisticated defense systems. To put it simply, our modern world just doesn't work without them. So here's the play-by-play of what China did. First, in a direct response to U.S. pressure on chip technology, they played their trump card. They added 5 new rare earth elements to their export control list. Then, they mandated that any foreign firms using their tech would now need a Chinese export license. And the final power play, they flat out declared no licenses would be issued for any defense-related use. Wow, a very clear message was sent. The implication here is just massive. China essentially put a leash on a vital part of the global supply chain, putting the entire tech and defense industry on notice. The message was unmistakable. We control the vitamins. But this was just the opening move. The real market-shaking bombshell was about to drop. And that bombshell came straight from the White House. The response wasn't subtle or, diplomatic. It was a massive, aggressive countermove designed to send shockwaves through the entire global economy. 100%. Just let that number sink in for a second. This wasn't a 10 or even a 25% tariff. This was a threat to effectively double the price of every single Chinese product coming into the United States. That's an absolutely staggering escalation. And the tone, well, it matched the threat, with commentary declaring there was, and I quote, no reason to talk to him, meaning President Xi. It was crystal clear. This wasn't just an economic threat. This was a diplomatic deep freeze. The two sides weren't just negotiating anymore. They were in open conflict. Now, for a market that a lot of people already felt was overextended, running hot purely on AI hype, this was the exact catalyst it needed to correct. All that anxiety bubbling under the surface about high valuations suddenly had a trigger. The party was officially over. What happened next was just pure chaos. The markets didn't just dip, they reacted with total confusion and a desperate scramble for safety. So what we saw next was a classic flight to safety. When investors get scared, what do? They often pull money out of things they see as risky, like stocks, and they rush it into assets that tend to hold their value during chaos. These are called safe havens, and historically, that means precious metals like gold and silver. And the numbers, they were staggering. We're not talking about a small jump here. Gold surged to a record high of $4,059 an ounce. Silver also shot up, hitting its own all-time peak of $51.52. And meanwhile, the stock market's record-breaking run came to a screeching halt. But just as everyone was bracing for a full-blown trade war, the story took a really bizarre turn. Over the weekend, a social media post popped up with a completely different message. It was a total reversal, shifting from pure aggression to conciliation? The whiplash was extreme. I mean, on Friday, the message was a 100% tariff threat and a diplomatic breakdown. By the weekend, it was a social media post saying, "We want to help." This radical shift in tone left global markets, leaders, and investors completely baffled, all asking one simple question: what is the actual policy here? So, this brings us to the crucial question. One post may have calmed the markets for a moment, but that underlying tension, it hasn't disappeared. The fundamental risks that this conflict exposed are very, very real. So the immediate panic might be over, but what are the real risks left on the table? Well, first, disruption to global supply chains. This means the tech we all rely on could get more expensive or just harder to find. That, in turn, threatens corporate profits and has deeply shaken investor confidence. And maybe most importantly, it brings back major market volatility from policy risk, the idea that the entire market can be turned upside down by a single statement.
And this is really the key takeaway. While a single conciliatory message was enough to temporarily soothe some frayed nerves, the deep-seated strategic and economic conflict between the US and China is nowhere near resolved. The board has simply been reset.
Which leaves all of us with the ultimate question. In this high-stakes game of economic strategy, with technology, trade, and global dominance on the line, what is the next move?